Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Wednesday, January 26, 2022. What an absolute reversal of an upside move today when the Federal Reserve came out with their FOMC statement and the press conference by Jerome Powell afterwards. And really remarkable, folks. This is the daily chart of the SPY. It really, you could see the volatility, but that's been normal. But I want to show you the intraday here. Take a look at this, right? So basically, this was today's price action. You opened higher here on the day. You had a little bit of a pop. You pulled back a little. Then you kind of slowly inched up. And then the Fed decision came out here. Initially, you popped up, making a new high. There was really, the statement was taken a little bit more dovishly than the press conference. And this is why you see this kind of weird action. So initially, it popped up because the statement didn't really mention the balance sheet. However, once we got in right here to the press conference at 2:30 p.m. Eastern time and the balance sheet was mentioned, the markets began to freak out. And if you recall, this is really what was the catalyst to the downside in the stock market going back to kind of the high in the NASDAQ in November and December, right? So again, as soon as the Federal Reserve started to chatter about not just tapering, not just raising rates, but actually running off their balance sheet, again, the balance sheet, in my opinion, that was like the straw that broke the camel's back. All right. And again, everyone knew they were going to taper, right? That was an emergency measure. The $120 billion a month that they were throwing into the system, that was an emergency measure that started in March 2020 because of COVID, right? And then you had interest rates that were ridiculously low, partially because of COVID, but partially because of the post-financial collapse issue. And obviously with the economy strong and has been strong, they wanted to raise rates, right? And the market was accepting that. The market freaked out when they talked about running off their balance sheet, which, by the way, is about $9 trillion. So again, the Fed is making a monumental error here. That's the one thing I think I want everyone to understand. They've made so many errors, right? The credibility's out the window at this point, at least with me. In all fairness, it's been that way with me for years. But I think more and more people are just saying, these guys don't know what the heck they're doing. All right, why do I say that? Well, number one, they screwed it up long ago with the measures that they were taking, the constant lowering of rates, printing of money, inflating the system, creating bigger bubbles that ultimately collapse, right? But number two, they should have been raising rates a long time ago. All right. Again, you go back to March of 2020 when COVID hit. Okay, I understand they needed crazy measures. We were freaking out. Everyone was thinking the end of the world was here. The markets collapsed. Okay. But as soon as the economy was showing strength, as soon as you saw GDP bouncing back, they needed to get rid of that taper and start raising rates then. Now they're trying to rush it. They're trying to do everything at once, which is ultimately going to be the downfall because it's going to start to slow the economy, which inevitably will then turn it around and mean that they're going to have to loosen policy faster. All right, so again, if they had done it very slowly, starting literally in maybe mid-2020 or late 2020, I think they could have slowly tapered very slowly, right, over the course of 6 or 8 months. Then they could have started raising interest rates already and had a couple under their belt and just do a few more. And then they still could be reducing their balance sheet by mid-year or late year this year. And it would be so slow, I think the market would be fine with that. But they didn't. They thought inflation was transitory. I said it wasn't forever. Going back to really the end of 2020, early 2021, I kind of ripped the Fed there saying there's no way it's going to be transitory. And sure enough, then they admit it's not transitory. So again, to me, I think the public, the markets are now starting to recognize that the Fed has almost no clue, not much better clue than anyone else in the country. And that is an issue here. So bottom line is they're trying to push it. They're trying to do it too fast to get inflation under control. They're going to ultimately tank the economy, and they'll then have to come out with lenient measures and start lowering interest rates again. It's all starting all over again, folks. All right, so again, markets collapsing here. Look at this, 1, 2, 3 bar surge from the high here, or even the high here. We were at 444 on the SPY. We bottomed out at 429. That's a massive decline, folks. We're seeing moves in the S&P that you don't see. I mean, we went years without seeing a daily move like this. All right, that's incredible. Markets did bounce back a little bit here, folks, into the end of the day. We are trading slightly. I believe we're slightly positive here. Let me throw on my after hours prints. And yeah, it looks like we're down slightly in the after hours, but not by much here, about $1 in the after hours. Tesla did report earnings after the bell today. The one thing I'd like to just mention here is Tesla was up about $25, and now it's down, basically reversing that. So this is where Tesla closed yesterday, and you can see we're virtually back to that. So in all fairness, Tesla earnings a non-event, right? I mean, it's down net a couple dollars on the day for a $900 stock. That's really not a big deal. Intel also reported. Intel is down. Not that much. Closed at 51.67. It's down about $1. So again, it shows continued weakness, right? I mean, stocks are generally lower, but we're not seeing a big drop like we have seen in various, really like Netflix, right? I mean, Netflix is the one that stands out. Yesterday, it looked like Microsoft was going to be in that camp. And then what was amazing about Microsoft, folks, is that Microsoft, initially the algos put out press releases that were like, that basically shone a negative light on their cloud computing side. I mean, all these sides, it was negative. And then once you actually saw the press release and once they guided, it was amazing. And then before you knew it, in the late after hours, like 6, 7 p.m. Eastern time, a couple hours after, the earnings were out, all of a sudden, Microsoft zoomed to the upside. Now, again, you could see it gapped up today and it couldn't hold it. It still ended positive on the day, but certainly it was a better scenario and kept the markets up at least into the Fed before, thank you to the Fed tanked it. Now, again, do I think that the markets are done here and going lower? No. On a technical basis, that would not be how you read it, right? So let's go back to the daily chart here. And right now, you still have this low pivot down here at 420.85 or so, right? That's your line in the sand, right? As long as you hold above that on a closing basis, you would assume that that's a short-term low. Important to understand, it is not a long-term low. All right, we are going to go lower. There's no doubt in my mind. I mean, could I be wrong? Of course, I could be wrong. But in general, I would say with a high probability, markets are going to break that low down the line. I'm just not buying it just this quickly yet. All right, tomorrow after the bell, Apple reports. We'll see. I mean, if Apple tanks 25%, then yeah, I mean, the markets crash. But again, if Apple comes out, maybe they save the day. We have more earnings next week as well. But right now, again, it looks like Tesla in the after hours. Actually, Tesla now is net positive for the day. Again, still down on earnings, but now it's up about $2 if you take away what it was up versus what it's lost after hours. It's net positive by $2. All right. So again, let's continue to follow things, but that's what the market's showing us here. If we continue to fall, the obvious target short term is going to be this upsloping trend line, currently around 385, 386. And then eventually, I think you go to the midpoint of this channel here, which is going to be right here at around 340. That's the pre-COVID highs. And again, if the Fed is really taking away all the stimulus and reducing their balance sheet to pre-COVID levels, then it makes sense that the markets would deflate to this level here, right, which was the pre-COVID high. That should be a very, very big support, in my opinion. Very, very big support. All right, going to the QQQ chart here. Again, the Qs, you can see Qs are down maybe $1 after hours, not really doing a whole lot. Same type of thing. The Qs were having a rip-roaring mega upside day. We were trading at 356.75 up here. Then the reversal came in on the Fed. They went as low as 340.5 before closing right around 345 when all was said and done. Again, normally that's an epically big day. When you compare it to recent days, it's kind of par for the course, right? I mean, it really is. It really is. I think it's important to recognize that Bitcoin, and usually I go to Bitcoin after this, but let's talk about Bitcoin here. So Bitcoin was in the same situation. Early in the day, it hit 39,000. And then once the Fed made it clear, or Jerome Powell made it clear that they were still talking about the balance sheet and reducing the balance sheet, running off the balance sheet, then Bitcoin started to fall as well. Remember, Bitcoin and crypto trades with tech stocks. All right, so if tech stocks are up, chances are Bitcoin's up. If tech stocks are down, chances are Bitcoin is down and cryptos overall are down. So you can see here, we hit 39,000 as a high, and now look, we're down to 36,582. That's a pretty big percentage fall there. Now again, as long as you hold this channel on Bitcoin, then Bitcoin is still neutral to positive bias, right? So again, it's very important for us to follow the charts. Just follow the charts. The charts really will guide us. If we break those levels on a daily closing basis, just like I showed you on the spiders and the Qs and Bitcoin here, then you have to look for your next leg lower. Next leg lower on Bitcoin would be down to about 29,000 here. And if that breaks, now you're talking about potentially going to, in my opinion, this level here, the 20,000, which was the high from 2017, which inevitably we're going to get to anyways, but that would be your next target. I'm just a little skeptical it's all going to unravel that fast. And honestly, the faster it unravels, the more likely the Fed comes out and stops talking about the balance sheet, which then inevitably gets the bubble to start to inflate again. I mean, you see how this works? I mean, it's really amazing. It's like the Fed is, if the Fed had done it slower, I think they could have ultimately raised interest rates more and run off their balance sheet more. And by doing it late to the party like they are and doing it so quickly, they're going to freak the markets out, which is going to tank the markets, which will then have a chain reaction of people feeling poor because their 401ks go down. Therefore, they spend less, which then makes companies that sell less, which means they have to lay off employees, which means the unemployment rate goes up. And we know what that means. The Fed's dual mandate says they got to also monitor that. So then they come in and they start easy money again. All right, this is a vicious cycle. But again, the Fed keeps fumbling and fumbling and fumbling the ball again. A little ridiculous. But again, the Feds, they're human beings, right? I mean, human beings make mistakes. They're supposed to be the smartest in the room. I dare to disagree, in my opinion. But, they're supposed to be. They're supposed to be. And for some of you guys thinking, would Gareth want to be on the Federal Reserve? The answer is a resounding hell no. No way do I want that job. Not even in a million years. Not even with ridiculous pay. No way. All right. Anyways, bottom line is we'll keep an eye on that. Let's go to the Russell here. The Russell, same thing, was up beautifully early in the day and then came right back in. The Russell, again, closing down about 1.5%. On the Russell, just monitor this low pivot here around 191 and change. Again, if we start to see more selling in the Russell, the next support, you'll have a little support at 185, then down here. But ultimately, the Russell would put in major support around 163. There's a gap fill, maybe 164 right here. You guys see this right here? That gap fill right there. That would be a major, that would be like an epically big buy level. Amazing to think that the Russell was at 245 not long ago, and here we sit at 195 after getting close to 190. And really, again, we're talking about November, right? And by the way, right here, this high on the Russell, that's basically when the Fed started to hint at the balance sheet being an additional thing besides just raising rates and tapering. All right, that's, again, you talk about a straw that broke the camel's back. That is absolutely what it was, folks. The market was taking it in stride with, a few interest rate hikes in 2022, tapering, going into, they were like, okay, we understand, it was emergency measures, etc. It's that balance sheet. It's the $9 trillion. And the Fed's not being clear. They're not like, oh, we're only going to reduce it by $1 trillion. They're like, they're just like, oh, we're going to reduce it. Probably because they want to reduce it a lot, because they know they're going to need that ammunition to attack the next collapse that ultimately they're going to cause. This is, the vicious cycle is just absolutely mind-blowing here. And again, it all is going to come down to an epic collapse, an epic currency, dollar, everything collapse. The Fed is not going to be able to save it at some point. Countries are going to dump our dollars at some point, go to the digital yuan probably as a digital, reserve currency, which is going to be horrific for the dollar down the line. By the way, it's all bullish for gold. And then ultimately, you're going to see it come back to being, again, a situation where the Fed, again, will no longer exist in its current form. I think there'll be a digitalized dollar, probably called something else, but there will be a stated max that can be printed per year. This entity that is like the Fed will be in charge of basically just monitoring it, making sure it's working properly. They will not be able to print. That will be the fixing of the system. All right. It's, again, the whole system will have to start from scratch again. It'll be nasty. I don't know when it's going to happen, when this ultimate collapse will happen, folks. Whether it's 5 years, 10 years, 20 years down the line, I don't know. But I do know that if you look historically at reserve currencies, the U.S. is getting close to the end of the general history of reserve currencies, and therefore you have to think that that's a decent chance that it's probably within the next 10-plus years or so. All right, so we will continue to Monitor everything here. I will continue to keep you guys posted as much as I can. Let's take a look at gold today. In fact, let's look at the real gold chart. I like that we can do that now. With this, gold did have a pullback today. Again, notice right up to that line. Is that incredible, folks? It just keeps hammering here, which is okay. All right, listen, when you have a day like today where the Fed stays as hawkish as it is, yeah, of course gold's going to pull back. But it's what happens after this, folks, is that at some point, as soon as you see the economy weakening and the investing public starts to understand that the Fed can really not hike and reduce their balance sheet to as much as the market was fearing, gold is going to have one of the biggest breakouts. I think that happens by mid-year. I think you see economic data start to weaken by mid-year, maybe third quarter. And then again, that could set up, you could actually get the big Christmas rally that didn't occur this year, this in 2021, late 2021. That actually could have happened in late 2022, even though it's just one more bubble that eventually will collapse. All right, let's take a look at silver here. See what we got on silver. Silver, same thing. Nice little pullback the last few days. I still think silver pulls back to this level, $28.28. That will be your first big support on that. That actually is a good buy level. I would consider picking up some SLV there, or maybe, a silver miner. We'll have to see. But that actually, after such a good move up, I think this is a great retrace. Again, $23.30 on silver to me looks very, very interesting. Okay, lastly, crude oil. Let's look at WTI here. And again, I like the fact that we can do this. WTI had a big move up. It did not negate the topping tail here, so it's still in play. Could it negate it? It could. Yeah, it could still go a little bit higher. Ultimately, the case is bearish, though. Keep that in mind. The case for oil is bearish because, again, if the Fed is going to start to erode the economy, then the demand side of demand for oil should be eroded. The market will sense that out, and you'll start to see a big drop in oil. But in the near term, it could still go a little bit higher here. The one line I want to put out to you guys where I would likely add to my short on oil would be if we get right up here, right? So it looks like it's right around 90 or just above 90. Look at that trend line. That would make perfect sense right up there to add to our short on oil. All right, you guys have a wonderful day. Wild stuff. I mean, this market is just absolutely out of control and wild, but good stuff. It keeps us on our toes, that's for sure. And I hope that, again, you guys can learn from these videos as we continue to make money. I didn't even talk on the winners that we took today, but talk about being smart and taking a little bit off the table. By the way, that's exactly what I did. Is I said to myself, I honestly don't know what the Fed's going to do, have no clue how the market's going to react, so let's take a couple winners off the table. Almost 15% on BITO, which is Bitcoin, and almost 17.5% on DKNG. Bank those, and then we just let it go into the Fed, and we'll let it go into the next couple days to week and whatever, and we'll go from there. Have a good one, guys. Take care.